All right, check mic 212. Sound check, quality picture check. Let me know if everything is all right and you can clearly see the picture and you can hear my voice. And we will begin in 2 minutes, just waiting for the rest to join. Okay guys, please type 1 in the chat box if you can hear my voice and you can see the picture, just to make sure that all is set and we will start. All right, great. So once again, I welcome you on today's webcast, on which we will be specifically talking about profit maximization on the sideways market, on the uptrend, and how to minimize your losses in case of a falling market. So I am your host for today. As always, my name is Dmitry. I'm the portfolio manager trader, and I'm not the only one hosting today. My colleague Erwin is going to be assisting me in the chat, so not a single he actually makes sure that not a single question is left unanswered. So yeah, big shout out to Erwin. So let's start. So on previous webcasts, I focused mainly on 5 exit strategies from the market, how to launch the bot, what makes the investment change different from the bot profit, and we also covered some tips and clues, some use cases. But today I want to focus mostly on what makes the classic bot different from the Asbot, and most importantly, what are the optimal strategies at current market. And I will also demonstrate my real cases and explain the logic behind my entry and exit points, as well as we'll show you what makes the narrow grid spacing different from the wide grid spacing in terms of profitability and the risk management. Okay, so this sound is repeating. No, actually that's strange because it should be alright. Nothing I've changed since the last time. Trevor, please check your video quality and settings just to make sure that you are not watching on some other devices the same webcast. So yeah, let's move on. Before we jump into the trading action and bot configurations, let's quickly refresh, and I will remind you about the power of artificial intelligence that enabled us at Bitsgap to create these optimal trading configurations so that you are now able to stay in the market 24/7 and to get consistent profit inflow to your balance. So a quick refresh. This is Cardano trading to USDT, and as you can clearly see, we have the trading range, which is defined by the upper limit price and the lower limit price. And in order to sell something, you must possess it on your balance. So in this case, you must possess Cardano so that the bot could place all of these sell limit orders. And in other words, this, let me use the laser pointer. So in order for the bot to sell all of these Cardanos, you must possess it on your balance, as I already mentioned. And basically these are all of your take profits. So these grid levels, they are known as grid levels. They are your take profits, because when you sell something, you get the profit from the market. So that's your take profit, in other words. Consequently, in order to buy Cardano later so that you would be able to sell it again to make profit, you must have enough of the quote currency in this case so that the bot would be able to plot all of these buy limit orders. And that creates this everlasting trading process as long as the price stays within the trading boundaries, within the trading range. So let's move on. Once again, you have the highest sell price, which is at the upper limit price. You have the lowest buy price, and in between you have all of these grid levels, depending on the amount of grid levels that you configured in the bot settings. So you have the current price, and these are all of your grid levels. Current price is 11,000, sorry, 1100 to 250. So imagine that the price then moves upwards and it triggers the first sell limit order. So what's gonna happen is that the bot will execute this sell order, and eventually it will place a new buy limit order right below that price at 11,250. At this price, your new buy order is gonna be created. So the arithmetical logic here, how the bot profit is accumulated, is simply you take the profit from a completed sell order right here. So your profit is 11,500. Then you plot a new buy limit order. So you must basically automatically deduct this amount. And what is left is your profit. That's the net profit, net of all fees. In this example, I don't take into account the fees, but they are actually already priced in. So imagine that this is just your pure profit, which goes directly straight to your available balance, which you can later use in any way you want. So you can launch the new bot, or you can manually trade, or you can withdraw this money from your account. So that's up to you based on your financial goals. With the power of artificial intelligence, we can now achieve a high frequency trading. So you say that in this example I have lent trading to BTC, and it has managed to make 7,099 trades in just 35 days. So that's 202 trades per day consistently without any rest. The bot simply doesn't have any emotions. So it just sticks to the plan and to the strategy that you assign to the bot, right? So that's one of the biggest advantages of automated trading, is that you don't have to spend and waste a tremendous amount of time, hours on manually trading, scanning the charts, and so on. The bot does the job for you. The next thing is, already I mentioned, the consistent profit inflow. So the bot is always looking for the opportunities to buy low and sell high. So regardless of the market trend, either it's going upward, sideways, or the market is falling, the price is constantly moving it's constantly swinging. So that means that the bot can always buy low and sell high to extract these profits from the market on your behalf, and added up together, these profits, they make up a decent return on a monthly basis, on annual return. All right, and I will show you my real examples, and you will see what is the annualized return and some other key metrics. And yes, it is emotionless. It trades 24/7, fully automated. And the pure magic of bot generating profits is that this profit is it goes directly to your balance. It is always positive. So regardless of the market trend, upside, sideways, falling market, it will always make profits. So here you see the visualization. And yeah, so that's the another advantage of artificial intelligence that we've enabled in Bitsgap trading is that you can always backtest different trading strategies and configurations before jumping into the real trading. So with the absolutely risk-free trading mode that we have, a paper trade, that's the demo mode, and the feature of backtest, you can find out what would the bot have generated for you if you would have launched the bot back at some point in time. So let's say a month ago, weeks ago, days ago. You can get this key metric, which is known as bot profit, so what would be basically the return of your strategy. So it can actually backtest strategies with the amount of grid levels that you set. So if you want to backtest the Asbot or the classic bot with only 10 grid levels, or with 50 grid levels, or even with 100 grid levels, it can automatically backtest and provide you with these key insights on what would have been the return if you would have launched it back at some point of time. So and the profit is generated in the quote currency. All right, so if you are interested, let's say, in basic attention token trading to USDT, but you wonder, I mean, on what metrics to base your expectations. So using the backtest, you see that during the period of 30 days, it has managed to make 15% in the quote currency, whereas a Raven has managed to make 16%, Ontology trading to BTC 10%, BitTorrent trading to BNB almost 9%. So if you are satisfied with these metrics, more or less, these metrics you can use on which you can base your expectations. It doesn't mean that in the future, like in the next month, you will get the same results. No, that doesn't work like that. That's backtesting. It's based on the statistical results, based on the historical prices. So the past results, they do not guarantee future results, but you can use these metrics to at least get an understanding on what would be the return. All right. So now let's actually go straight to the action, and we will launch our first bot. So let me open the page. So you go to the main page, and here you select bots, and that's actually my real account here. So let's use this for now, but later I will switch to the demo mode, because in the demo mode I have more active bots, because I use the demo mode as the platform for my experiments. So before actually launching any bot configurations on my real account, I am using the demo mode just to find out proper configurations and so on. So here it is, the demo mode. You see the amount of active bots that I currently have. On the left side, you see the investments allocated to each of the bot. You see the cryptocurrency pair and some of the key metrics like investment change and the bot profit, which we will cover in 6 minutes. So stay with me. I have a separate slide to explain what makes bot profit different from the investment change and what actually unites them, and how to use these metrics, and how to not to get frustrated when you see some differences in the percentages. So on the right side you have this panel, and you see automatically I am in the advanced mode already. So you see I have this option to choose an Asbot strategy or the classic bot. So for the Asbot we have what we call the highest frequency trading algorithm, and if I switch to Asbot, you see it automatically defines the trading range for me. But you can actually change it, so you can drag the upper limit price lower, or you can drag the lower limit price higher. and now is your new configuration. So you can actually have the sell side narrow and you can have a wider buy zone, but for this configuration it is even visually already quite obvious that you must have more of the quote currency because your buy zone is wider in comparison with the sell zone. So you see it's clearly defined here. With this investment amount, that's, you see, 0.03 bitcoins, that's exactly almost 347 USD as of current exchange rate. And in order to initiate this bot, you must have 1,000 parallels, which goes to this sell side, and the system will automatically distribute this investment allocation. So as with the quote currency, you see you must have that amount of bitcoins, so it's definitely around 70% of your total allocation, which goes directly to the buy side. So this quote currency will be used to later, as soon as the price reaches these levels, it will buy parallel to later sell it at a higher price. And yeah, if you want to have a wider sell zone and a narrow buy zone, you see the change. You see you now must have almost 3,000 parallels on your account, and if you actually don't have it on your account, then the system will automatically buy it for you as soon as you click on initiate the bot. But you see that I am not able to launch it because I already have it trading for me. So let's switch to maybe another one which I don't have. But before that, let's check the balance, and you see it looks like I don't have enough of the USDT and Bitcoin, so I will get rid of some trades. Maybe this one, let's close it right now. Yeah, so just I will also later explain what are the options to close the bot, but as of now, let's just close it. All right, let's just abolish this trade to get some free cash. All right, so here we go. Now we have some bitcoins. Here we go, refresh, and now I can once again reconsider opening this trade on parallel trading to Bitcoin. And also here I can choose the cryptocurrency pair. And you might have noticed that below I have this strategies section, which is known as recommended strategies. So these are the cryptocurrencies based on the monthly performance. So it turns out that BAND trading to USDT is the top performer, as the bot profit for this one is 208, all right, for 1 month. If you want to see what is the recommendation based on the weekly backtest result, then you see that comp trading to Bitcoin is in the top one. So the top three is Iris trading to BNB, comp, and trading to USDT. So these are 3 cryptocurrencies that you can actually consider now for trading. So this is your source of trade ideas, as we already have this pre-calculated backtest results. So based on these performers, you can choose an optimal cryptocurrency for you to trade. And if you want to see, well, actually let me show it right now. If you want to see the backtest results, you just click on, let's say, comp trading to Bitcoin. You will see that it is now displayed over here. You get the automatic trading range allocation, which you can once again change in any way you want, and you can backtest this one. So you can click on backtesting results, and let's say you want to see the results from the 6th of August until today. So we will let the system to calculate the results. Let me actually refresh it once again, because it can be due to my internet connection issues that it's not calculating 15th of July until, let's say, today. Okay, let me refresh the page. It's actually not the problem of Bitsgap that it's not loading right now. It's more like the problem of my MacBook, as it doesn't have enough of the computation power sometimes to handle these calculations. So yeah, you see we have now some results plotted on the chart, and it takes time for it to calculate the results. But I don't know why it just got stuck here for some reason. So let's come back to this a little bit later. Just don't want to waste your time. So moving forward, let's say we select band trading to Bitcoin. Let's assume that we've defined that our trading range is going to be like this. And the investment allocation I want to be, let's say, 0.03. Because I remember that I have this amount right now. Well, actually, let's use 0.4. And you see that in order to launch this bot with a total amount of 180 grid levels, I must either have this amount of Bitcoins or I have to adjust the grid quantity so that I would be able to launch this bot with this investment allocation. So as I don't have this amount right now, I will adjust the grid quantity. So it turns out that for this one to launch, I must have this amount of investment allocation with the grid quantity of 7, which I can actually also readjust. And let's say I want to place 10 levels. So here's what I got. I either have to have this amount or I have to readjust. Let's use maybe another example on another exchange. Let's assume OKEX. And let's see my balance. Okay, so here I have more BTC. Let's use strategies, GNX trading to Bitcoin. Quickly, let's use this one, already defined. You see, it's almost a perfect sideways market. So this configuration looks perfect for me. It is trading from the support level up to the resistance level. And actually it has plotted this trading configuration almost automatically. I just have to make some tiny changes here. So I will adjust. So you see now I can initiate this board with 63 grid levels. This is my total investment amount. That's exactly 4,500 USDT. So if I click on start, the system will tell me that in order to launch this board, I must have that amount of GNX on my account in order to launch it. And notice that the number is different. So here it's almost 14,000, whereas here it's 13,000. Sorry, that's 134,000. So you see different number. That's because the fees that we will pay in this configuration is already priced in. So that's why we will buy more GNX to pay in fees. So as I don't have this amount on my balance, I will click on yes buy, and the system will automatically buy this amount at the market price. But you are not actually obliged to use this option to buy at the market price, because we all know that buying at the market order, you actually pay a fee, all right? Whereas if you go to spot trading, smart trading, over here, you can buy this amount of GNX using the limit order or a smart trade that we have. But just to make it simple for you and to make it quicker, let's just stick to the plan, and I will initiate this bot with a market fill order. Just wait for some time to refresh the page. Yeah, I definitely have to change the laptop. So sorry for that. Sometimes it just works properly and smoothly, and sometimes quite rarely, but it does. It can be quite laggy, so I apologize for that. Okay, so it should open now. Okay, come on. All right, so let's not waste time and go straight to the presentation. Now is actually the time to, as you saw, all of these configurations where you can change the upper limit price, lower limit price, which defines your trading range, and automatically the system defines a optimal trading range for you. You can always change this lower price and upper price, as well as the grid quantity, investment value. You can use the percentage to lower your investment. So these are two sections where you can manage your investment allocation. So now is the time to define what makes Scalper different from the classic bot. So the primary difference is that this one is the classic bot, and you see here that the allocation in terms of the amount of the base currency to buy is equal. So here's the parity. So the system will buy that amount of BitTorrent at that price, and at another price it will buy the same amount of coins, which if we multiply is gonna result in a different investment allocation. So here the equilibrium is reached only in the amount allocation, all right, whereas the investment sum is different. So at that level you will spend, I mean the system, the algorithm will have to spend this amount of USDT to purchase this amount, and at other prices you see the investment sum varies. So that's what defines the classic bot algorithm. It only creates a parity in the total amount of the base currency which it purchases, whereas when it comes to the Asbot, which is known to be and has proven to be the algorithm with the highest frequency trading configuration, you say in this case the parity is achieved in the investment sum. So the amount is different. You see, at that price it will buy this amount of coins, and at that price the investment is going to be different. So the total investment is the same for each level. So the parity in this case is achieved in the total investment allocation. So once again, in case of the classic bot, the parity is in the amount, whereas in case of the Asbot, the parity is reached in the investment allocation. And that leads to sometimes different results. So it can be that in some cases the classic bot configuration will bring you more profits or more losses in case of the falling market, whereas it can be that in case of this configuration, using the Asbot configuration, you can reach higher returns. So it's actually, there is no golden rule, and it's absolutely up to your experience, your practice, to find out which one suits you the most. And I mostly stick to the Asbot configuration, as it allows me to plot up to 180 of the grid levels. It has trading, stop loss, take profit feature. Well, the classic bot has all of these features as well, but I prefer the equality, the parity in the total investment allocation rather than in the amount of coins to be purchased. So, and most importantly, the algorithm in the Asbot is designed to trade within the investment allocation horizon. So it tries not to go beyond this. So it tries to trade within this allocated investment. In case of the classic bot, it can be that if not cash is enough for him, it will take some extra from your available balance, but it's only in rare cases. And yeah, so that can be the case. So if this happens on the rising market, when the classic bot takes some extra from your available balance, then this is good for you, because you buy something more on the rising market, and hence your profit is going to be higher. But conversely, if it's the falling market and the classic bot takes some extra from your balance, which is actually a very tiny portion of what I call extra, so don't worry. The system in both the Asbot and the classic bot sticks to the plan of not going beyond the investment horizon. So we are constantly working on this optimization to find out what is the best one, what is the best solution for the classic bot, the original one, and what is the best configuration for the Asbot. All right, and some other features like built-in security features I will explain to you at the very end of this webcast, so stay with me to get all of these features. So as we were trying to launch the bot, let's finally do this. Let's use something trading to Bitcoin. Let's use SXP. Let's reduce this down to 50 grid levels. Yeah, the balance is not enough, just quantity like this. So now let's launch it. Okay, please, so this time don't let me down. I just need to show this example finally, how to launch the bot. It takes, let's use this one. For some reason it's always the case only on the webcast. It's never the case when it comes to real trading and demo account optimization. It's just for some reason it's not responding as of now. Okay, so let's assume that you press the start board, it buys the required amount of the base currency, and then automatically it will be displayed over here. So all of your active bots, they are over here, and you can click on the view button to see all of the completed orders, the amount of profit generated. So you see that we also deduct the fee that you pay for each of the trade. So the profit that you see in the bot profit section is net of all fees. So that's your pure profit. So that's the feature that not every platform currently has in the cryptocurrency space. So that's the feature that we've developed here. We have this all priced in, and full transparency is provided. So you can get all of these metrics over here. You can export in CSV format, so to calculate some extra metrics if you want, let's say Sharpe ratio, maybe Sortino ratio, and some other things. You can also click on open orders to see at which price and what will be the amount of the base currency that the bot will buy. And you can see all of these orders on the chart. Let's click on, let's say, Cardano trading to USDT, the one that I have right now. So you see all of the trades that it managed to execute. So grid circles, they represent buy orders, and red circles, they represent sell orders. And all of the active orders, they are all displayed as these lines. So as soon as the price reaches this sell order, it will sell the base currency, well, a portion of the sell of the base currency, and then later we'll place a new buy limit order somewhere over here. So the concept of grid spacing here arises. That's the space between your grid levels. All right, so the wider, I mean the bigger is the grid spacing, the higher is the distance between your orders, the bigger is the profit potential, because that creates the marginal effect. All right, that's quite logical, that the lower you buy, the higher you sell, the bigger is your marginal profit. Whereas when you have a grid spacing, let's say reduced to, sorry, not reduced to, but increased up to, like over here I have 130 grid levels. So you see this, all of them are very tightly allocated to each other. So that leaves almost no option for the price to not trigger my levels. All right, so even though my grid spacing is reduced, and that means that my potential profit is also reduced, I have more chances that the price will trigger all of my orders. All right, so that's something for you to consider. If you are chasing for bigger returns, then you must be prepared that the price, as you have wider grid spacing, the price might not trigger your level, so you will stay with your open orders and no profit generated. Whereas in this tight, narrow setup where you have grid spacing, let's say from 0.1 to 0.5, then you maximize these chances that the price will eventually trigger your almost all of the orders plotted on the chart, resulting in this consistent profit inflow. Tiny profits, but added up together, they still make up a decent return. So you see all of the metrics over here. You see, in my case, my top performer here, I think, is land trading to USDT. So with the total investment of almost 3,000, I've managed to make $715. So automatically, so this amount is on my balance. All right, so the key difference when it comes to automated trading and manual trading is that in automated trading you get this consistency. All right, so the the algorithm ensures a consistent profit inflow to your balance, because it always buys low and sells high automatically. Whereas in manual trading, you buy something and you wait for the price to go higher. And let's assume that you bought something and when, yes, the price went higher, and now you see that your unrealized profit is in the positive zone, but still this unrealized profit, it's not tangible. All right, it's not in your balance yet. Whereas in automated trading, you get this consistent profit inflow. So be honest to yourself and ask yourself how many times you skipped this opportunity to lock in profit while manually trading, and because of your greediness, because you were expecting the price to go even higher, so that's why you didn't take profit from the market. So this is kind of discouraging emotion in trading when you don't get what you expect. Whereas in automated trading, you don't have this emotion anymore. All right, you get this consistency. All right, so the bot consistently generates profits for you, and I am very satisfied with this metric here. So for the period of 27 days, 24% in total automatically, and I didn't spend a minute on monitoring this trade or making any adjustments. I just made sure that at the very beginning, at the very launch, I had properly set all of the configuration settings, and I'm just now waiting for the bot to generate profits on my behalf. So that's what I get from automation. So now is the time to define what makes investment change different from the bot profit. So what really makes it different is that well, actually they are not different, they are united in a way that, you see, that's BitTorrent trading to USDT with the total investment of 400, and you see the investment change is 12%. So that means that up to my I am up. I mean, I am making profits by 12% as an added value to this initial investment allocation. So so that's around what, $48, something like that. And the way the bot has managed to achieve this investment change is because the price of the base currency was moving upwards. So that means the value change was positively affected, and the bot was making profits for me in the quote currency. So this 8% is already priced in the investment change. And here's the calculation just to make sure that it works the way I describe it. So the first method to calculate is basically you take your investment allocation and multiply it by the investment change. So that's now your current investment value. And the profit in this case is the difference between the current investment value and the initial value. So that's $48. And the second method is by taking the the amount in the open orders, and in order to get this data, you click on view. Okay, so the page is lagging. Yeah, so you click on view and you see you have in open order some base currency and USDT. So if you add it up together, this will be your current investment value. Same what I'm doing here. I take what is in my open orders plus bot profit, so that's exactly the same investment current value. And the profit is again the difference between the current investment value and the initial investment value, so that's almost 49 USDT. Same number, same number. So you see now that bot profit is always positive, all right? So it makes profits, generates profits for you regardless of the market trend. Whereas investment change is also affected by the value change of the base currency. So I will now show you all of these scenarios which affect your investment change. So the first one here is the rising market. We are having here an upside momentum. The bot just keeps doing its job. It just buys low, sells high, buys low, sells high. So it just generates this profit for us, all right? Whereas you see that the price of, in this case, that's BNB, trading to Ethereum, is also appreciating. And as we have always, well, almost always, some of the base currency in open trades, that means that the value of BNB on this rising market is also positively affected. So that creates this double effect. You see the value change of the BNB and the bot profit generated. So that is what I call active investment change, which is basically the value change plus the bot profit. So that's the first optimal market at which you are looking for to launch your bots, because at this market the bot is able to achieve higher returns for you. Whereas on the sideways market, I really love the sideways market, especially when it comes to automated trading, is because on the sideways market with automated trading I am now able to earn during this stagnation. So the sideways market is known as the period of stagnation, right? Because the price is kind of moving upwards, then it reverts from the resistance level and again moves downwards, bounces off the support level. So on average, you say it stays somewhere in between, in the neutral zone. So if assuming that you've purchased the BNB at that point at the middle price, so by that point you would be in the zero profit area, all right? Whereas with automation, you basically let the bot to generate profits for you. So it uses your BNB to generate profit in Ethereum, all right? So that's the effect on the sideways market. And here's the example. That's what I define a sideways market for Bitcoin Cash. And notice that during this period, if I would simply buy Bitcoin Cash at that price, at that point of time, where you see my pointer and you see the hodl phrase here. So assuming that I purchased Bitcoin Cash at that price, and then I see that the price has moved upwards, and now I am up by 5%. So a simple hodl strategy would bring me only 5%. So from that point up to current price. So that's the distance from that price up to this price. That's exactly 5%. Whereas if I launch the bot, if I'm using automated trading, my investment change is almost triple higher. So you see it's 14%. That's because of the added value generated by the bot, as it was buying low and selling high on every market swing. You see all of these trades here, that's the job of the bot, which it has successfully completed, each time buying low and selling high. And that is why automated trading algorithms at Bitsgap, they significantly outperform simple hodl strategy on the sideways market. So launching bots on the sideways market is actually what you are looking for in order to maximize your returns automatically. And now is the time to find out what are the instruments developed by Bitsgap to boost your trading results and to secure your profits. So the first one is the trading up feature, and you say you have this trading range which is defined by the upper limit price and the lower limit price, and as the price moves upwards, establishes a new higher high over here. With a trading up feature on, you basically let the trading range to follow the price. So now your trading range is going to be here because it will follow the price accordingly, and by that I mean it will readjust upper limit price and lower limit price accordingly with this upside momentum. So you see eventually the price then again moves upwards, establishes even a higher high. So in this case the trading range will follow the price. Whereas assuming that the price eventually breaches the lower limit price, so it goes lower the trading range, and as we know the bot is only trading within the trading range. So in this case, as it breached the lower limit price, the bot wasn't able to execute trades at this area because the market was at that time trading below the trading range. But what will happen if the price then comes back? So if it bounces again back and returns to the trading range, then the trading activity will continue. So the bot will continue trading for us. If the price then eventually establishes even a higher high, you will find out that your trading ranges will be moved accordingly. So that's the feature of trading up. It ensures that the bot stays in the market all the time when the market is moving upwards. So it will only follow the upside momentum and it never follows the downside. So that is why it is called a trading up. And this feature you will find over here, a trading up. And in case if you forget what this is all about, you have this small tape here which explains exactly this feature. So to elaborate this topic further, I will explain this example here. That's NG trading to Bitcoin. That's my real trade, and in this trade configuration I had my trading up feature on. So you say initially my trading range was defined by these upper and lower limit prices, but as the price eventually breached the upper limit price, so it went beyond the trading range, as I had my trading up feature on, the trading range successfully followed the price appreciation, and you see all of these trades it has managed to execute. And now my trading range is over here. So spot the difference. Without the trading up feature on, I would get stuck over here, and none of this action would have occurred in my case. Whereas with the trading up feature on, I basically let my bot to follow the price, and now you see that my action is happening over here at the highest price. So I was able to follow the upside momentum, and that's how I maximize my returns automatically. So with the trading up feature on, you don't have to worry about the price anymore. And if the market goes upwards and at that time you were sleeping, or maybe you were at the plane, well, you just were offline, sorry. With the trading up feature on, the bot wouldn't skip this upside momentum, all right? So you don't have to worry about this. That's why you should consider using a trading up feature on if you want to achieve a full automation. Because some traders, experienced traders, professional traders, they sometimes they use this trading up feature on, sometimes they don't, because on some trades they prefer this manual control even though they are using automated trading. So they'd rather relaunch the bot at another price later. So they'd rather close the bot and then look for the price to move downwards and relaunch it at a lower price right before an upside continuation. So it can be the case, but if you want to stay always in the market and regardless of these short-term falls, all right, because on this short-term falls, your investment change will be, of course, negatively affected, but be true to yourself. You won't be able to skip all of these short fall terms because you cannot predict the market with this 100% accuracy, all right? And that's why using trading up feature on, you basically let the bot to follow the upside momentum 24/7. So you see, that's the example of YOTA trading to USDT, and in this case I don't have my trading up feature on, so that's why as soon as the price breached the upper limit price and the price went higher, no action happening here. That's because I got stuck with my trading setup at this trading range. Whereas if I would have switched my trading up feature on, then the bot would have managed to make profits on this upside momentum as well. So my return would be higher comparing with this one that I have here. So the trading up feature on, we covered it. Now another one which is actually a benefit which derives from a built-in algorithm we've developed. The bot profit offsets negative value change on the falling market. So here's how. Let's assume that you've purchased the base currency Quantum here at that price, at that point of time where you see the hodl, and the price eventually moved downwards, so you would be in the minus 6.88% of the investment change. Whereas with automation, as the bot was trading, even though the market was falling, the bot still was buying low and sell high, and that resulted in a profit generated over here. So this profit is then used to offset the negative value change, because remember, when we calculate the investment change, the bot profit is already priced in. So instead of having minus almost 7%, with automation you would have bear only a minus 3.18% of a loss. So that's almost a double hedging effect, all right? Automation can significantly minimize your losses on a falling market. And here is a perfect example of how it does it, all right? So once again, consider a simple hodl strategy, minus 6, well, almost 7%, whereas with automation, that's only minus 3%. So it literally saves your profits because of this added value. So the sources of trade ideas, the one that we've covered is recommended strategies. So you know the logic behind this one. So we will skip this slide. Now backtesting. So the backtesting, once again, it takes the historical prices and it simulates the performance of the bot as if you would have launched it back at some point of time in the past. So it takes into account the volatility, risk, value change. Well, actually it doesn't. It takes only the bot profit, risk, and volatility. But in the example that I'm going to use right now, I also take into account the value change. And here's how. So that's the example NG trading to Bitcoin. From the 11th of April until the 11th of May, you see it has managed to make almost 34% in bot profit. So that's the bot profit in the quote currency, and the value change of the base currency is not taken into account here. All right, and we are actually working on this to take into account the value change of the base currency. So hopefully sooner or later you would be able to use the backtesting with an investment change already, with the value change already priced in. So as of now, we are using the instruments that we've developed as a way they are presented. So the bot profit, and from that point, that's exactly the date of the launch, 11th of April over here, where you see my laser pointing at. So the upside momentum potential was almost a 66%. So from that point until the higher high, 66% value change, whereas the risk was minus 34%. So from that point down to the lowest over here, minus 34%. So keep this in mind. Another example, BNB trading to BUSD, same period, but different profit generated by the bot, different upside momentum value, and different risk. So you see that's from that point up to that 35, and from that point down to the lowest, minus 23. So when we compare these cryptocurrencies, we now can see which one is the optimal choice for us. So based on our risk appetite, whether we are quite conservative when it comes to trading, so that means that we'd rather stay with strategies which have lower risk and in this case lower profits. Whereas for those who are looking for maximized returns, they must have a high, well, most likely that you will have to take a higher risk. So NG in this case is the choice for those traders, investors who are looking for higher returns for a given risk. So you see the bot profit for NG 34%, that's almost by 21% higher than the one generated by BNB. But the risk for NG is also higher. So in order to have this higher return, you must take a higher risk. So that's why this risk is justified over here. And it's higher by almost 11%. So once again, if you are a risk taker, then it could be that NG is your choice. Whereas if you are quite risk averse, so you'd rather stay with some still decent returns, because 13% per month is a very decent return for a given level of risk. So using backtesting, you can find those optimal cryptocurrencies and you can compare them with each other to find those that bring you, offer you optimal returns and optimal risk. Yeah, so let's come back to the main page here, and you see, let's say I choose SXP. Well, actually, let's use Ethereum and compare Ethereum with BNB in recent times. So, and by the way, if I choose grid quantity 180, it will simulate trading using 180 grid levels. But I will stick to, let's say, 20. And just, well, okay, 17, whatever. Show backtesting. And yeah, so that's the period of 30 days. For some reason, it again takes time to launch this. But guys, I promise you, it has never been the case before. Especially then I'm not hosting the webinar. It has always perfectly calculated these backtest results. But as of now, for some reason, it's just it's just lagging. I don't know what to do, but yeah, you saw the picture here. Your results should look like this. So it will calculate 30 days result, or if you select another range, then it can be a 7-day result, it can be 10 days result, so it's up to you. All right, and you can use these metrics to compare with other cryptocurrencies to find the optimal one for you. So before I explain the last topic of today's webcast, let's just come back once again and go over some trades that I have here to validate my logic. So I think length, yeah, that's my best one. Well, actually, let me use my real account to show you some of my real trades, to show you that I'm actually using my real money to trade as well. So this is one of my accounts here, and I have right now 3 open trades. That's BNB trading to USDT, Ethereum, and basic attention token. So for BNB, what I've noticed is that it is consistently moving, respecting the support level. So if I drag the line here, let me use the instrument that I have here on left panel, and let's make it, yeah, it's already white. Let's make it wider. Well, actually, so even though it has breached this support level as of recently, you see almost in all of the previous cases it has successfully retested the support level and bounced off it. So in the history, I have this trading setup, BNB, which I launched at the 4th. No, actually, you see, I closed it at the 4th of August, but I launched it in this case at the end of June. So if I look at the end of June, that's somewhere over here, and you see the price then moved upwards, respecting the support level. So that's why I stayed in this trade for such a long time. That's 40 days up to until the 4th of August. All right, because later I decided to launch this bot with a new amount of grid levels. So I had 40 grid levels before, and the result was almost 78 USDT for this period, so which is a quite decent return. And then I decided to relaunch the bot with only 18 grid levels, because I want now to have a wider grid spacing. So I want to have now a higher profit potential, and you see it is making profits for me. So even though I have launched it here and the price is now trading lower, my investment change is 0. Whereas if you would simply hodl from that point down to current price, you would be in the negative change zone. So you would be down by, well, almost 4%. You would be down by 4%, but with automation, I have a 0 investment change right now. So as I still expect the price to go higher, that's why I stick to this configuration. I also have Ethereum. Well, Ethereum is quite obvious because in general the market is moving upwards, and Ethereum has proven to be one of those cryptocurrencies that follows the upside momentum when the Bitcoin establishes new higher highs. It significantly, in many cases, outperforms in the percentage Bitcoin rally. So that's why I've launched this Ethereum configuration. You see, from that point of consolidation, so I've noticed here that the market was forming a triangle symmetrical pattern. Well, almost looked like this. So, and as I know, on the rising market, when you see these kind of patterns, which is explained as a period of consolidation over here, most likely to breach the later upper boundary, so that's the resistance level in this case, and it eventually happened, and now I'm trading over here as I have my trading up feature on, so I keep making profits. All right, so I don't even waste any of my time on this. I mean, I just launched this, and from time to time I just monitor the market just to make sure that we are still in the game. And that's the result of this consistent profit inflow. So that's the value that you get. You see, it has successfully managed to follow the market. Basic attention token, yeah. So well, it's up to you guys to decide on which foundational disciplines to generate your trade ideas. So either you're using technical analysis, fundamental analysis, maybe you are a price action trader, maybe you are trading from the support and resistance levels using the volume profile indicator, RSI, moving averages, and some other indicators. Well, it's up to you. What I've noticed is that top 5 cryptocurrencies, as they are the most liquid, they tend to follow the support and resistance levels. So they almost all the time respect these levels. They bounce off the support level and they also revert from the resistance levels. So I'm always looking for resistance levels and support levels, as well as looking for the moving average as to validate the strength of the trend. Yeah. So if you want to learn about the trading setups and which are the instruments, indicators to use to decide when to find optimal entries for your automated trading bots, then you just go to Bitsgap main page, go to section about, you click on blog, and in the blog you will find out that there are some recommended indicators about which I wrote some articles, moving average, RSI, and examples are based on automated trading. So use our blog to expand your knowledge and to learn more about automated trading. And finally, secure trading, the last section. I'm very proud of this feature that we have. That's the unique feature that we actually have here at Bitsgap, is that the algorithm is designed to avoid almost all of the possible dump and pump scenarios happening on the market. So we know that there are quite many, as some traders call it, shit coins, because of their low liquidity and because of the manipulation happening on the market. Some whales, as we also call them, big market players, they can buy and by buying they pump the price, and you see this is the result of the pump, and they can actually dump the market by selling big. So that's why we have this built-in algorithm to avoid this extreme pump and dump scenarios. So without optimization, on the left side you see here the scenario without optimization, the bot would simply get stuck with all of these buy limit orders executed at the highest price. So that's something you want to avoid. You don't want to buy high, you actually want to buy low. You don't want to buy high, it's the converse logic. You actually want to sell high. So in this case you would get stuck with your buy orders here, and as you see, the price eventually reverts back to its normal trading zone. All of these base currencies purchased at that price would significantly affect your investment change negatively in this case, because the price has fallen. Whereas with optimization that we have at Bitsgap, you are now able, that's the built-in the algorithm feature, so you don't have to switch it on like in case of the trading up and stop loss. It's just already built in the algorithm. You would have this smooth performance trading dynamic. All right, so you wouldn't get stuck with your buy limit orders at the highest price. The system avoids such extreme pumps, and we are constantly working on this further optimization of such features to secure your trading and to ensure that you maximize your returns. So this is our biggest challenge here we are working on. So yeah, that's it for today. Let me see if you have some interesting questions, because as always at the very end I look at some of the most interesting questions to answer. Yeah, by the way, the question about the trading on, sorry, about the trading up feature, can you change the options on a bot that's running? Like, can you turn trading up on if the bot is going? That's the question from Zerfan. Well, you see, let me switch to my demo account. No, actually I can use my real one. You see, if I click on view, I have my trading up feature on because initially I switched this feature on, and I can now switch it off. All right, same if you at the very beginning, at the inception of your trading configuration, if you haven't switched your trading up feature on, then you can switch it on later. All right, so that ensures that you will stay in the market. Because it can be that the market at the time when you launch the bot is so volatile and you don't want to skip this opportunity to maximize your profits on its upside momentum, then you just simply forgot to switch on the trading up feature on. That's why later then you click on, you see here I have ERD trading to USDT Asbot, but without T. All right, that means that I don't have a trading up feature. So if I click on view and now switch trading up, now I have it on, and that means that as soon as the price reaches my upper limit, and in this case my upper limit is, yeah, this price. So as soon as it reaches upper limit, that's over here, and breaches it, the trading up feature on, because I already have it on, save changes, the trading range will follow the price if the market moves eventually higher. Same applies to the stop loss. And yeah, these features I mostly discussed on other previous webcasts, so you can watch the recordings that we have of some webcasts on the YouTube channel. But yeah, stop loss is the basic risk management order. It's just in case if everything goes to hell, the market is falling, you want to limit your losses. So as soon as the price reaches the stop loss, the bot will automatically sell all of the base currency. So that's going to be your 100% exit from the market. There are actually some other options to close the bot, which are presented over here. You can sell at the market price right now, so you can close it by selling all of the base currency left in your open order. So it will sell exactly this amount of ERD as a market sell order. So that's your 100% exit from the market. And you can also place limit sell order at a break-even price, because you see, for ERD, my investment change is now in the negative zone. So let's assume that I don't want to bear this loss. I don't want to agree to close the bot at the negative value change. I don't want to click on it right now, but I want for the price to appreciate to that point at which my investment change is going to be zero, at least 0%. All right, by that I lose nothing. So if I click on close and close at break-even price, the bot automatically sets this break-even take profit zone, order, at which, and you see that's the exact price which the market must reach in order for my investment change to be zero. So it will automatically sell all of the ERD at that price as soon as it reaches this level. So that's 0.024. Right now you see we are trading over here, so the price must reach this level in order for my investment change to be zero. So yeah, and yeah, if you want to close the bot, but you also want to keep you want to keep all of the base currency, then your option is going to be just cancel all open orders. And what is left, this will go to your balance. So you will have this on your balance. Yeah, so that's what we have here at Bitsgap. 5 exit strategies: take profit, stop loss, cancel all open orders. That's the third one. The fourth one is to sell the market price, and the final one is to sell at the break-even price. So I think that's enough of the instruments for you to choose, based on which you want to exit from the market. So the monthly performance is backtested in I see some errors here. So do we take into account the compound effect when we calculate backtesting? Well, no, we don't take it as of now. We only calculate annualized estimate and monthly estimate. So when you decide whether to trade NG to Bitcoin or BNB to BUSD, you will find out that here you have this annual estimation based on monthly returns, and you have this annual estimation for BNB as well, which you can compare with each other. It doesn't take into account the compound effect because, as I already mentioned, the value change of the base currency is not considered in this calculation as of now. All right, so sooner or later, maybe not, maybe yes, you will have this feature in backtesting, because you see it takes a lot of computational power and some tools to be reconsidered. So let's come back and see if there are any other questions. Let's choose the last one. Yeah, by the way, big shout out to Erwin for answering to all of your questions. Thanks, Erwin. So yeah, the question is, using I think we will just out for a minute due to some internet connection errors. Well, yeah, just to conclude, guys, use demo mode to experiment, to find your optimal strategies, to develop your existing strategies. And with automation, you can actually diversify your trading strategies. So you can have narrow grid setups, you can have wider grid setups that I have here. So this all provides trading diversification. And you can backtest strategies before jumping into trades. So you have all of the metrics, you have all of the instruments to maximize your potential return and to limit your losses in case if the market starts falling. So yeah, I appreciate your time. Thanks a lot. Waiting for your feedback, as we use your feedback to develop the quality of our webcasts. Watch a series of previous webcasts on our YouTube channel, and I'm also producing some short videos for you to grasp the logic of automated trading at Bitsgap, some features. So soon, new video will be released at Bitsgap, so stay tuned. If you have some questions unanswered, then you can use our Telegram chat, or you can use the chat box on the main page here, where you have our kind community managers to answer your questions. So we are here for you guys to trade, to optimize trading, to let you stay in the market, and to just follow this market rally together with Bitcoin. So you have all of the instruments to follow this rally, and you're welcome. See you next Thursday, hopefully, and I wish you profitable trading. Once again, thanks a lot. Stay safe. Love, peace. See you next time.